What's up everybody, Tom here with another video. Well, it was a pretty wild last 24 hours in the markets around the world. We'll be taking a look at what happened right here and more in this video. We'll also be taking a look at our technical analysis levels moving forward on the S&P 500, Nasdaq, silver, dollar index, Bitcoin, and also the debut of Tesla and what this means for stockholders. A lot to cover in today's video. Should be good. Stay tuned, guys. All right, so as we mentioned, the last 24 hours was certainly quite wild in the markets. We saw stimulus come back in terms of the government has approved some form of relief for the markets. This really helped the banks. You saw JP Morgan, Bank of America, Wells Fargo, etc. move up. But it was all about this new strain coming out and the concerns over further lockdowns, further, of course, problems and jolting of the economies that had the markets worried in the future session. In fact, the future session was really, really bad. We saw the markets open a little bit stronger than they were trading in the futures. They were trading well over 2% down at one point. We saw in the market early morning, SPX and Nasdaq leading the charge down. And then, of course, by the end of the day, things seem to have gotten better in terms of things were improved in the markets. We look at the actual sectors, really the financials were the standout, everything else was down, and of course energy was really getting hit hard by this new strain news and new information coming out. So what about this stimulus? Is it better than nothing? Well, it's barely better than nothing. $900 billion approved in this stimulus, and that's just not going to be enough. Basically, it means that we're going to get $600 checks to people, and they're supposedly going to be sent out next week. But as we know, this is a far cry from the $1,200 checks that were being discussed and the $2 trillion plus package that was supposedly in the works. So is it enough to hold the market sentiment so high? Well, we did see some cracks starting to appear in the market yesterday, and this is what I expect over these illiquid times. Remember, Christmas into the end of the year is often a period for big flash kind of selling and flash buying. There isn't as much volume going through, and it just need to go and look at 2018 to see what happened over that period. Before we get into the technical analysis though, what about Apple and Tesla? Well, we saw Tesla enter the S&P 500 and it went from 695 close all the way down around 6.5%. We'll be looking at the technicals for that a little bit later. But Apple stock was rising, and that's because they're going to release supposedly iCar in 2024. Now we scroll down and basically it looks like Apple are going to enter and produce passenger vehicles. And this is something that's been rumored for some time. But this is a big competition for Tesla, and it just shows that competition is going to get more extreme over the next couple of years as big technology companies move into this space. So Tesla finished 6.49% down on its debut into the S&P 500 because of this. So let's get into the technical analysis. What happened yesterday? Well, look at this VIX, the volatility spike here. Did it get through 25? It certainly did. Did it get almost up to 32? Yeah, it was very quick. And then, as is customary on the VIX, it sold straight back off all the way back down to the 25 zone, but it still held above that 25 area. So could we be looking at further volatility over the next couple of weeks? I think so, as we get more information and also the stimulus wasn't as big as hoped by the markets. This could cause further kind of volatility, uncertainty, and we all know that the market does not like uncertainty. So the VIX is certainly one that I'd be watching at the moment. But for me, and for a lot of you, I'm sure it was all about dollar index yesterday. Look at this beautiful trade. So we had the 20 exponential moving average holding it the first time. The second time, we mentioned this in our weekend analysis and last week, and it comes back up to the 20 exponential. Third time, hits it, 91 as well, a great psychological point, and then of course sells straight off that area and zone in the direction of the downwards trend. If we go down into the 1 hour, you'll see how pronounced that sell-off was. And this was coupled by a whole bunch of movements throughout silver, cryptocurrencies, and other things. So will this be the continuous decline of the US dollar? Well, of course, with a stimulus package that is smaller than some people had thought, possibly the pressure on the US dollar won't be as extreme as was initially kind of planned out. But this was a very nice move down, and now it's going to start consolidating above this 89.75 and probably start to form a bit of a base around this zone. We'll have to keep watching the dollar index, but that was a great sell off the 20 exponential. Congratulations to anyone that was in those types of trades. If we take a look at gold, gold had a big wild day. It went down as low as the 1855 area and as high as the 1905. If we scroll down into something like the 4-hour chart, we'll notice that 1900, the point of resistance that we thought would happen, certainly did hold. And then it came back down to our 1875, 1878 zone. Previous resistance, holding up gold for now. And while it did spike through, your stop loss should have always been hopefully behind the last price action trough, which is around here at the 1844 zone. So gold looking relatively bullish right now, still holding above this zone, and it needs to do so for the bulls to still maintain control. But I think yesterday's story was really about silver. And just to put in perspective, here's our monthly after the GFC and how high silver got up to that $48 mark. And we had a very, very nice kind of movement recently, and it got well above 26. So let's break this down now to a daily and take a look at this 26 zone. So we spoke about the 26 support, resistance, and it found resistance here and then just swooped straight through. It got as high yesterday as 27.37 before returning back down and just holding above the 26 resistance. So why is this zone important? Well, basically we have a big channel here, guys. We take that channel distance, we extrapolate that out, and we'll notice that it basically is saying 30 around where those previous 29, 75, 80 highs were. And this could be the start of silver moving more bullish. Basically now we're going to see it do this type of thing, hopefully. Go to 28, find some resistance, and then possibly move higher. And we've been more bullish on silver than gold recently. And the whole story behind that is because silver is used in infrastructure project rebuilds. What's going on right now? We have a huge amount of course, stimulus around the world, and therefore a demand for silver is coming through as we reopen some parts of the economies and try to look to get higher job numbers out there. So silver's one I'm going to continue to watch, but very, very nice close above. And it's probably worthwhile dialing into the smaller time frames to see what's happening next. Just like with gold, if you dial into the 1 hour, you'll be looking at probably, hopefully seeing a break above 1885, because when that happens, where's it going to gravitate towards? 1900, and a break of 1900, where's that going to gravitate towards? Previous levels. So things like 1930 would be the next level zone for gold, and then after that, 1960. Let's now take a look at Bitcoin. We're on the hour here. And I wanted to mention the hour because I think there's some important zones. We've got 24,000, which acted as strong resistance. For any bull buyers, if we do see a breach of 24,000, it's most likely going to come back down after the breach, potentially test the 24, and then continue on to the next psychological zone, being the 25,000. But what's happening right here has got me very interested. We have support, resistance, moving averages everywhere. And look where it's trying to test. It's trying to create a little double top here on the 1 hour chart, where basically if it breaks through this zone and closes below, it's going to go put pressure back on the 22,000, which is the zone it came off yesterday. If we take a look at the daily, look at this rejection. It actually rejected all the way down to the 22,000 just below, found some support and bought back up. But it's still quite far away here from the daily 20. And we know that the daily 20 is supported at 1 time, 2 times. Could we be looking at a third touch of the 20 finding support for Bitcoin? I think it's certainly possible after its big move up and historical move up recently in this cryptocurrency. Ethereum is very, very similar. It's come back to the 620. It hit 622, 621 yesterday, bounced off that zone. This is the critical point for Ethereum. It just kind of blasted straight back under that area. And for any bulls here, you're going to be needing it to get above and close above all of this mess in here on the 1 hour. We need it above 620. A close of that is going to trigger further buying pressure most likely. And then hopefully we get to 640, 660, and then new highs ideally. Anything where it closes below these lows down here though is going to be very bad, and we could go now and see a test of this trend line. So basically a test possibly of this 590, 580 zone, and maybe some buyers or bulls will come in there. So there's 2 critical levels happening right now on Ethereum, and on Bitcoin. LiQWYD, very, very similar, though I would be saying this 90 is a key area. Look at this, it's so great. Previous resistance, that's going to be a heavy support zone with a 20 exponential on the daily as well. But for now, LiQWYD is trying to keep its head above this $100 psychological zone. It bounced straight off that 100 and it's buying pressures coming through. We'll look at LiQWYD more if it's worthwhile soon. So let's now talk about the market. Well, we had Tesla's debut, and Tesla, of course, closed on Friday at around 695. Now, 695 is great, but 649.86 was the close as of Monday. So we did see that Apple news, plus just generally the hype and the FOMO coming out of Tesla. Remember, Tesla tends to buy the rumor and sell the fact. Everyone takes profit right on when any of the good news comes out or any of the information comes out. It always tends to do this. Where's the pullback zone to? Well, I've got a fib drawn up here, and you'll notice that there's that previous resistance and a 20 exponential right around 600. And we haven't touched the 20 exponential for some time, and it's acted as a little bit of pressure support before. So possibly we have further sell-off pressure coming into Tesla now, maybe another $50 down, and then that's where the bulls might regain some control. But I think this Apple news, plus just general concerns about the price of Tesla right now, could push it back down into 600. The hype and the FOMO is gone out, and now it's time for some reality check, and of course the $600 to possibly be the level that we see next for Tesla. Onto the broader markets, US 100 Nasdaq. Well, US 100 Nasdaq continues to do the same thing. 20 exponential on the daily, 20 exponential on the daily. And yesterday we saw that flash movement over the new strain. We saw basically a big kind of futures sell-off and then some support buying coming through. And then of course the end of the day was almost even with where it opened. This just shows me that the volatility and uncertainty is back into the markets. And also Wall Street is not too sure what pricing should be on the markets right now. Is this more of a like bull trap to try to get those last FOMO kind of buyers in from the retail herd? Or is this something else? And I think we're going to be looking probably to the SPX to give us the information there. But the Nasdaq came back very strongly yesterday, and that was a nice move up, little double bottom here on the 15-minute kind of time frames, 1 hour. I'm sure there was some day trading opportunities there as well if you were open for it during the period. But the SPX still remains the real key, I think, and that is that we have here this 3640 zone. Yesterday, SPX opened right on it. The 50 exponential blue line here found support, the end of the Bollinger as well, 2 standard deviations, and previous support, previous resistance. What a great zone. We're still really targeting, if the sellers are going to get control, a close below the 3642 is going to be the key zone or key area that we're looking at. And that will really create a little double top pattern, and it could be the end of this little bit of a bull run into a correction period. We'll continue to follow that on the channel as well, so make sure you subscribe and hit the alert button if you're interested in finding out more about that. But we see here the SPX did have the recovery. Right now, it's in futures trading, kind of hovering around that zone. If we go down to things like the 1 hour, you can see again, it just did not close underneath that zone. It just shows you the technical analysis, especially horizontal support resistance, works so well. And what a beautiful zone for day traders to pick it up in the morning on the market. Great, great area. Congratulations to all that got that one. It's obviously a great zone and a great period of time to be trading that. Now, if we think about what's happening next on the market, we go back to the daily. If we break through the previous highs, well, we're in uncharted territory now. So what is it going to gravitate towards? Generally, it'll gravitate towards things like the 3800, the psychological zones. This also is closed as a bullish hammer. So if we get flow through tomorrow and we see a new high, that should start buying pressure. So 3800 is probably the target if we reach a new high. And if we break through the 3642, I think really we could be seeing at least down to 3540, if not further selling pressure coming through the markets on the S&P 500. So we hope everybody, of course, has a great week. I just want to quickly reiterate, it is in a liquid time over Christmas and end of year period into the start of January. Remember, Wall Street, big bankers, and just generally traders tend not to trade as much during this time. And go and look at things like the odd US dollar back in 2019, and you can see here that there was that big spike that happened over the January period. This was, for lack of a better term, fake news basically, and this effectively was one of those hunts that you don't want to be part of. And often, even if you think, oh, I could have sold it and made money from it, it will slip, it won't enter properly, you won't get the profits that you think. So just be careful of trading, especially currency pairs and certain commodities over the break. I think this is a very, very difficult time to trade. And when things like this happen, you don't want to be on the wrong side of it, of course. So good luck to everyone. We'll see you in the next video. And of course, happy trading and make as much money as humanly possible, but only if it's safe to do so. Bye for now, guys.